It's a shocking twist. I'm your host, Steve Metre, and thanks for joining me today. In our show today, shocking new details emerge about Sunday, and I want to understand that heading into the weekend, President Joe Biden said he was in it to win it, and that was a popular belief by the news media. And yet, on Friday evening, I published a video saying that there will be a world-changing announcement coming last weekend, which would involve President Joe Biden stepping aside to let Kamala Harris run for office. And sure enough, that's exactly what happened. We're going to talk about what the real reasons behind President Biden's decision to step aside, why Kamala is likely to win the Democratic nomination, and yet the path to the White House is not as smooth as the Democrats believe, because they're going to face one major obstacle, and it's called the economy. Now, let's head over to Bloomberg, where we picked today's story up with the headline, is Joe Biden bows to Democrats who wanted him out. But is that just the only reason? No, not really. Although this did do something unusual, it upended U.S. politics, as the 81-year-old became the first president in more than half a century not to seek re-election, quitting the 2024 presidential contest on Sunday and endorsing Vice President Kamala Harris, age 59, to be the Democratic nominee to take on Donald Trump in an election that's less than 4 months away. And many people will believe, and have good reason to, that he stepped aside because his odds of beating former President Donald Trump were diminishing, and this was evident by the polls. But there's some other key reasons why he stepped aside. Biden's exit went from seemingly unimaginable in June to all but inevitable this weekend. The stunning reversal was born of Democratic lawmakers, donors, and voters turning on a once-beloved 5-decade party stalwart who they came to fear could not vanquish Trump at the ballot box. But this wasn't just about losing the White House, as there were more serious issues the president was facing, and decisions had to be made sooner than later, as you're about to see. Democrats have grown increasingly fearful that Republicans would take control of Congress as well. And you think about, of course, what that would mean, potentially having an all-Republican government. This is something, if you're a Democrat, you absolutely do not want to see. And there was a lot of risks here to suggest that if President Biden continued to stay in the race, it wasn't just a matter of losing the White House. It was about losing both the House and the Senate. And that is just a risk too big for the party to take. And the drumbeat of Democratic lawmakers grew louder last week as more poll data rolled in, underlining Biden's weakness. By late in the week, members of his cabinet were also questioning his prospects in private meetings, suggesting that everybody wanted him to step aside. But one thing even my competitors are starting to question, because they're seeing, of course, their subscribers leave to come to us, is how are we generating such good returns and consistently strong win rates? Well, look at this. As a close of Friday, our CTA Time Pro, you want to trade the markets and beat the machines? We show you how. Right now, we have 2 open trades as of Friday's close. Both of them are up. That's a 100% win rate. We added a trade this weekend, and look at this, our Momentum Timer Pro. Maybe you like to trade the technicals. Going into the weekend, we have 9 open trades. 8 of them were up. In fact, on Friday, our machine position report stopped out 2 trades for a net near 4% gain. And how do we do that? Well, we look at the machine positioning every day across a wide range of securities, and when we find the machines are in deep short position and price moves against them, our report flags that. And of course, that gives our subscribers an indication to put on a trade. But how about momentum? A lot of people like to trade those technical indicators. Look at this. On Friday, we stopped out for a near 2% gain on one of our recent trades. And how do we do that? Because we look at momentum and these technical signals over longer periods, but we also add a proprietary overlay. And when the signals flip after a deep pullback, well, that flags our report. And here's what you get. You get the daily report. You get tradable signals. I go through each signal and tell you which ones I think are the best and you should do. I give you the stop loss levels. I track the trades in return, and we give you a weekly update on where you should set your stop loss levels. And here's the best part. There's a 30-day free trial, and that's why my competitors are afraid, because they don't give away a trial because they know they can't compete. But you can start beating the market. Links in the description below, because when we talk about beating things, of course, Democrats now say they need to do everything possible to keep former President Trump from taking the White House, and that means ramping up donations. And we saw that donations to Harris's campaign have surged past 50 million on Sunday, a sign Biden's move had freed up financial support that had been sitting on the sidelines. And this is one of the key issues here, is it starts to become about money. So you look at the risk, of course, of what happens if President Biden does not beat former President Donald Trump. They lose the White House, but potentially also lose the House and Senate. And you talk about the financial engine behind the Democratic Party. Well, you need to engage them, and getting him to step aside, that unleashed a lot of money they desperately need. But here's the real issue behind, of course, why President Biden is endorsing Vice President Kamala Harris for nomination to be president, is who gets the $96 million in Biden's campaign account. Well, yes, my friends, in the end, everything can be traced back to money, and this is a bunch of money that is tied to whomever, of course, he puts his endorsement behind. Look at this. Vice President Kamala Harris, who has mounted her own White House bid under what used to be the Biden-Harris campaign, has now access to that cash. If another candidate emerges, that person would likely have to start fundraising from zero. And of course, you look at the difference between having 96 million versus nothing. It's a huge advantage. There's a very specific reason why President Biden endorsed her and why she is likely to get the Democratic nomination. For donors, the bottom line has just been simply beating Trump. Democrats poured more than $1 billion into Biden's campaign coffers in 2020 and hundreds of millions more into super PACs to get Trump out of the White House. The problem for deep-pocketed donors is now, how do they go about that with little more than 4 months left before Election Day? And here's my question to you. Do you think Kamala Harris or any other Democratic nominee can beat former President Trump in this election? Weigh in the comments, who do you think is going to win and why? Because donors don't have much time to unite behind a candidate. And this is a case I made on Friday, that the Democratic National Convention to nominate the ticket starts in Chicago in less than a month, and that his window for stepping aside here was narrowing by the day. And I want you to think about, we look at sports stars and we talk about legacies, and there's the same effect here. For President Biden, he has a chance to step aside from a long storied history in politics on top. And you think about going out either on top or potentially losing a major election. Well, it has ramifications, and sometimes the best move is just to step aside. But the question then becomes, who will be Kamala Harris's running mate? Well, I have one surprising prediction, because that is the question now that everybody is asking. Who is she going to choose? Even though she does have a nod from Biden, the question then, is she going to have rivals? Well, here's an interesting spin that I'm going to give you. Love to know who you think her running mate could be, but how about this? Could you imagine if we saw Michelle Obama be her running mate? Wouldn't that be interesting? But as we talked about at the beginning of the show, the bigger issue here that Democrats face going into this election for president is all about the economy, because remember, voters vote based on their wallet, and right now the trend of the economy perhaps is Kamala's biggest enemy to taking the White House. If we look over to the Chicago Fed National Activity Index, and this index was designed to gauge the overall economic activity and related inflationary pressures. Now, the view here from the Federal Reserve is that the economy was going to experience a soft landing or potentially no landing. Now, we can take away the no landing scenario, and perhaps then we look at a soft landing where there's a pullback in the economy in the first half of the year, and then the Fed said it would likely rebound into the second half. So as we look at the Chicago Fed National Activity Index, what we see in June, which would mark the end of the first half of the year, is that activity decreased in June from a substantial plus 0.23 to plus 0.05. 3 of the 4 broad categories of indicators used to construct the index decreased from May, and 3 categories made negative contributions in June. The index's 3-month moving average increased to minus 0.01, although up slightly from minus 0.08. So we look at heading into the beginning of the second half of the year, and what do we see out of the Chicago Fed National Activity Index is evidence potentially of a soft landing. Production-related indicators were up, although down from May. Sales, orders, and inventories categories contribution was negative. Employment, this is a big one, and this is the issue, I think, that what we're going to see Kamala Harris face is criticism about how the economy was handled, particularly if we see a continued rise in unemployment claims. Is going to put into question her ability to lead. Well, that remained in contraction, and what we see is personal consumption and housing categories is that went negative and stayed there from the same place last year. But as we look now to perhaps more leading indicators, we see the New York Manufacturing Index contracts for an 8th straight month, and this is dangerous because what it's saying is manufacturing activity is headed lower, and when manufacturing activity goes, it takes the job market with it, and it's an indication that economic activity is declining. Again, a problem that Democrats are going to have to deal with and explain to voters how they can turn around the policies that led us down this path. And here we see manufacturing activity continue to decline modestly in New York State, according to the July survey. The general business condition index held steady at minus 6.6. The new orders index was little change at minus 0.6, suggesting that orders remained flat, and the shipments index tipped up to 3.9%, pointing to a slightly increase in shipments. But the issue here is that new orders were little changed and remain in contraction, and as demand goes away, well, that means, of course, manufacturers do not need as many employees. They do not need those employees they have to work as many hours. And sure enough, the index for the number of employees came in at minus 7.9, pointing to another month of employment contraction, while the average work week index came in around 0, suggesting that hours worked held steady. The prices paid index edged up slightly to 26.5, but if you look at this, what we're seeing is indication that businesses cannot pass on these higher prices and that consumers can't afford them. And so what's happening is demand at the factory level is declining. That means employment levels are in decline, putting more people on the unemployment line ahead of the election. You talk about a dangerous time to be running here. The firms remain fairly optimistic, though, about outlook, but look at this. The outlook for employment growth remained weak and capital spending plans remain sluggish. If we don't see a turnaround, of course, in manufacturing demand and employment, it means that the U.S. economy is likely to be in a recession by the election. And what we know is usually incumbent presidents don't win re-election. In this case, we don't have an incumbent president running. What we do have is a potential incumbent vice president who's going to take the nomination. Will Kamala Harris be our next president? Can she pull that off if we're in a recession? Love to know what you think. Weigh in the comments, because we look at the labor market as really this is the last hope for the U.S. economy. As we see here, the general business conditions diffusion index for the New York Manufacturing Index is shown in blue. And when you see decreases in manufacturing activity, what usually happens is it has an impact on the labor market. You see back here in the early 2000s, continued unemployment claims shown in red were fairly static, but look what happened heading into the global financial crisis. They headed higher and very quickly accelerated as the economy continued to spiral down. You can see here around 2019 the same effect happened, and look at now, a decrease in manufacturing activity has matched the recent rise in unemployment claims and is keeping workers on there. And if the trend here that started to move higher persists, well, it's a foregone conclusion that we will indeed be in a recession. But is there one part of the country that's giving us a slight bit of hope? Well, perhaps as we head over to Philadelphia and we look at the Philly Fed Manufacturing Business Outlook Survey, and here we can see that activity in the region expanded overall. The survey's indicator for general activity rose, and the indices for shipments and new orders turned positive. But will this hold? I'm going to make the case why it won't. The employment index turned positive, suggesting an overall increase in employment levels. Both price indices continue to indicate price increases, and future activity indicators rose, suggesting more widespread expectations for overall growth in the next 6 months. So why things in New York are starting to not look as pretty? Well, things in Philadelphia are looking better, but hold tight. In this month's special questions, the firms were asked about changes in wages and compensation over the past 3 months, as well as their updated expectations for changes in various input and labor costs for the current year. Look at this, 65% of firms reported no change, suggesting that they're not going to be increasing wages, which is something that employees desperately need because they're running behind inflation, and that is the biggest problem that we see. In fact, we can look at the details and we can note that while they hired people over last month, the average employee work week did shrink, although very slightly, suggesting demand continues to not be as rosy as the headline index suggests. And the reason we believe the Philly Fed index is likely to head lower is very clearly based on total compensation growth as we look at average hourly earnings multiplied by average weekly hours of production of non-supervisory employees. This is shown in red on a year-over-year rate of change against the current general activity index for the Philly Fed. And what you see is decelerations in total compensation lead to a slowdown and outright contraction in manufacturing activity. This time, Philly is saying, hey, look, things are getting better. The labor market says, no, they're not, suggesting we're likely to see a sharp reversal of manufacturing activity, not just in New York, not just in Philadelphia, but all over the country. And yet traders game plan now what Biden's exit spells for the global markets. And of course, the Trump trade was likely a lock, but now perhaps not so much, as markets already had plenty to deal with as summer kicks into full gear, from assessing the Federal Reserve's interest rate path to the heart of earnings season. But now the 2024 presidential race keeps crowding into the headlines, and this is going to have implications for the market. We're already seeing today, while I film this, that interest rates are rising as bond prices are falling. Stocks started the day early up and are now starting to reverse. And what we know that with a decision less than 4 months from November, this threatens to fuel gyrations on Wall Street at a time where we noted in yesterday's show that Goldman Sachs has said that we're seeing the market head into the worst month of the year. That's August, where outflows tend to dominate. This isn't, again, another good sign for the economy or the wealth effect. But as you can see, we saw a shocking twist this weekend, one that I saw coming. Now the risk is, will the economy hold up in favor of the Democrats? Will it fall apart? Well, the odds are right now is the economy is not going to be their strong suit or be their ally, as Kamala Harris looks to potentially take the Democratic nomination. We'll see who does that. We'll find out soon enough. But with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.